Welcome to TradeTheNBI.com. This is John. This report is for the 8th of July. And, well, coming off the rising NBI Magenta, we called it moving above the declining 23%. Not an issue. We've had rising red DOC, rising green, matching it. In fact, I think green's still just slightly underneath it, but with both of them climbing, that's good enough. You can see the shakeout also moving in tandem with that. And this is like we started yesterday with the brief dip in magenta, but it ended up the day higher anyway. We do see a little bit of white activity, but we're not seeing any shorts from a DOC standpoint there. In fact, it's moving towards the zero line. So everyone is happy with where things are at this far down on the bottom, which is sort of ironic. Everyone's waiting for the job numbers. If they prove weak, then they'll make the case that the Fed will have to soften up, but the Fed really does not appear to be thinking that way. So it's an interesting, I don't know if they're just willing to ignore what's in their face or just anticipating next year already, figuring this year is shot. But there's a lot of this year left and a lot of things can happen. From a NASDAQ, we considered it to be the leader on this and sure enough reached the 38%, but on the declining Morganacci lines, that became a little bit of resistance. That's why we're seeing some softness in pre-market here. Euro. Well, it was quite an epic moment there. Let me just slide this over because it was July 15, 2002, the last time the euro was parity to the dollar. And you can see that low at 1.0072. It's strengthened a bit since then. We're up at 1.012. But so for a brief moment there, at parity relatively to the dollar. And it's just a reflection of just how bad the euro situation is. And it's not going to get any better anytime soon. I know that G20 leaders were meeting and the Russian representative was there and they just gave him nothing but a hard time when I'm pretty sure he just showed up to see if there was anyone who was smart enough to want to start a dialogue, but nope, not the case. So we're going to continue on this road. From a gold standpoint, still ebbing lower because of this expectation that there's going to be a reduction in prices soon. Where they're getting that concept, we don't know. Oil moving back above that 100 level, but definitely off the highs. It's a nice 20% decrease, but could be short-lived. We'll see. There's the pause in the Ukraine situation right now as Russia regroups after taking the Luhansk area. If that starts to escalate again and the U.S. continues this idea of oil price caps, all the other ideas they did with sanctions and that were epically foolish, and this is just going to add to that. Unlikely you're going to get worldwide agreement to support such a thing, and I think they can do it through insurers on oil tankers, and that it's a disaster. I think JPM came out with a comment where they could see oil jumping to 320 on such a move because the Russians are already planning oil reductions as prices are elevated enough that they can do so as they shift their barrels to the east. And of course, at a certain point, any continued provocation, and they just may decide to cease flows to Europe completely. Really isn't going to impact them. They don't need the euros or dollars at all. It's not really helping them because they can't use them anyway. So it becomes an interesting point of contention. Of course, the flock into treasuries abating a little bit. That's causing yields to rise just a little bit. And I think the bond market's going to reflect more the accurate picture of where things are headed from a Bitcoin standpoint. Again, holding that 19 level that was in the high 19s, got to 20. So that moved back up over 21, a little bit of safety room. However, we know that can fill back in quite quickly. And in fact, we have positive extremes right here, taking us back to the 2,500 range. So we'll see how that plays out from a 50K standpoint. Longs were good, and then it kind of closed up this one before the dip began. And when we look at the 5K, here's the current pre-market and the jobs report expectations coming through. Most of the day was fairly clean. I think it was just a pretty simple read from the early rise. We had some decent fillbacks into that, and particularly came later part of the day where we kept those retraces back to the 50%, but kept turning around with the magenta. Becomes very simple to see, moving above orange, and in this case white as well, with the crossover of blue. And then particularly if you get that dip of the orange DOC, it's enough to send you back up. And that's exactly how things transpired through the day. So pretty clean action, all in all, good stuff. It's going to continue to be, I think, more of that mean reversion back and forth. It's going to be pretty tough to justify a move back towards 4K, but it's never stopped bulls before. I think we're more likely to get back towards 34 before 4,000, which is interesting because we're only a little over 100 and a quarter points away from 4,000. But stranger things have happened. Just especially with the readings as they are right now, it's still bulls have it slightly, even though it looks like a little bit of fading is taking place within those readings, and so we're getting that early read of it here. As always, though, you can look for me on the Skype chat. Trade well. We'll talk to you later.